5 reasons a TFCGW account is better than other savings accounts, even qualified accounts. If you're new to this channel, you're probably wondering what a TFCGW account is, and you may not be sure what a qualified savings account is. So let's start off with some real quick and simple definitions. TFCGW stands for Tax-Free Cash Growth Warehouse. I think that's fairly self-explanatory. But a tax-free cash growth warehouse account is a very special savings account where your money grows tax-free and, like a warehouse, it's privately owned. And only the owner has the key to access it. It really is a very special savings account and can only be obtained through one particular financial vehicle and only by intentional design. More on that later. Since we're including qualified accounts in this discussion, let's define what that refers to as well. Qualified savings accounts are savings accounts that came into existence basically to replace pensions and put the risk associated with such accounts back on the owners of the accounts and off of the employers who used to provide the pensions. These accounts include 401ks, 403bs, TSPs, IRAs, and SEPs. They're called qualified because they're designed and used primarily as retirement savings accounts. As such, they qualify to be tax deferred. So you can fund these accounts with pre-tax money, and they're allowed to grow tax deferred. Of course, tax deferred is not tax free. That money will be taxed as regular income whenever withdrawals or distributions are taken, and may be subject to penalty fees when withdrawn before attaining age 59 and a half, or not taking the required minimum distributions after attaining age 70 and a half. Okay, now that we all know what's being discussed here, aloha. I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the managing director of the Hawaii Financial Freethinkers Academy, a nonprofit financial literacy education organization. For the past several years, I have focused on and specialized in the infinite banking concept and developing the tax-free cash growth warehouse finance strategy. If you find this to be helpful, please like this video and subscribe to this channel and share it with your family and friends. Also, please post your questions and comments here. And now, here are the 5 reasons that a tax-free cash growth warehouse account is better than any other savings accounts. TFCGW accounts are guaranteed to grow safely without the risks of loss associated with savings accounts that are invested in the stock market, including bonds and treasury bills. Most people assume that the money they deposit in bank savings accounts is safe and is not invested in risk markets, but that's not entirely true. You see, banks are given legal exemption from what would otherwise be termed a Ponzi scheme. It's known as fractional reserve banking, and it allows banks to loan out up to 10 times the amount of money that they actually have in liquid capital. Not only that, banks invest your savings in a variety of risk markets, and that's why they carry FDIC insurance. But that only covers up your savings up to $250,000. So you see, if those investments take a nosedive, or all the money the bank never had in the first place and they loaned out to other customers gets defaulted on, the bank can go bankrupt and you lose your savings. It's rare, but it has happened. You may remember the government bailing out some of the largest banks in the country some years back, and that was due largely to defaulted loans. And of course, all those qualified retirement accounts are invested in the stock market. Sure, the money managers that offer those accounts through your employer when presenting their sales pitch hold out the carrot of potential gains of up to 12, 15% and more. And in many cases, your employer will match your deposit into those accounts up to a small percentage of your salary. So that's free money, right? Well, sure. But if it's invested in the stock market, even as conservatively as bonds and T-bills, it is all subject to loss. It is in no way guaranteed. And while financial advisors tell you that you can expect around 12% annual gains, the reality is that the typical gains are more like 5% annual. And then when you actually take your money out of those accounts, you get taxed at your regular income tax rate. So even if you get a little better than the average return on your account, say 6%, after tax, you will realize only about 4% gain on your investment. And that's if the market doesn't take any major losses while your money is invested, or even a minor loss close to the time that you start taking retirement income from the account. Even with regular bank savings accounts, whatever little interest they may pay to your account, you have to report that and pay the IRS their pound of flesh come tax time. None of that is the case with TFCGW accounts. You don't put pre-tax money into these accounts, but once your money is in the account, it grows tax-free, compounding, and that growth is guaranteed. It's safe. It is not affected by the stock market at all. And these accounts earn dividends on top of the high compounding interest that is guaranteed. Currently, my favorite provider of these accounts is paying 6.1% dividend interest. You don't report those gains to the IRS, and it does not get taxed. So that's real gains. I already mentioned that TFCGW accounts receive high compounding interest in dividends. Now, together, that's called dividend interest, guaranteed at a minimum of 3.5% annual interest, and then dividends added on top. Of course, the dividends may go higher or lower year to year, but think about this. With the top 5 mutual providers of these accounts, dividends have been paid every year for the past 150 to 170 years without missing a year. Yeah, that's incredible. That means dividends were paid to these accounts even during the Civil War, during World Wars I and II, during the Great Depression. These providers paid dividends to their customers' accounts on top of the guaranteed interest. And of course, dividends were paid to all these accounts during all the recessions that have been suffered over the last several decades. The providers of these accounts are exceedingly strong and durable. You can be sure your money will grow at a very nice high compounding rate in a tax-free cash growth warehouse account. As I mentioned earlier, the current dividend interest rate paid by my favorite provider is at 6.1%. That's substantial. With other savings accounts, including bank CDs and all the invested accounts like IRAs and the rest, interest rates are very low, and you have to pay tax on any gains. Plus, they all charge maintenance fees, statement fees, and other fees that are not charged on TFCGW accounts. Now, here's another great advantage to TFCGW accounts: liquid, no penalty access to your money. With regular bank savings, there's a fee to withdraw from your account. It's usually a tiny fee, but there is a fee. There's a charge, and it's probably more than the amount the account earns in interest. So definitely a negative. With CDs and all the qualified accounts, if you withdraw any money from those accounts before the maturation date, you get hit with big penalty fees. And There may also be an additional 10% penalty from the IRS if you're under 59 and a half years of age. And there's another disadvantage, which brings me to the fourth big reason and benefit to TFCGW savings accounts, and my personal favorite, along with the really high compounding interest. Your money in your TFCGW account continues earning the high compounding dividend interest even while you use the money to pay for things. How is that possible, you ask? With TFCGW accounts, you access the money in your savings by taking leveraged loans. That is, your money is used as collateral for loans while it stays in your account earning the dividend interest. Yes, there is a loan interest charged for the loans, but when your account is set up with the right provider, the simple interest charged for the loans is less than the compounding interest paid to your savings. So your savings continues earning all the compounding interest, and a lower simple interest is charged on the loans. That means you are always earning more than you pay and coming out ahead. And the loans are tax-free as well. And the fifth reason tax-free cash growth warehouse accounts are better than other savings accounts, this applies to the qualified accounts. No required minimum distributions, or RMDs. If you don't know, RMD is an IRS rule that requires the owner of a qualified retirement account to take at least the minimum required distribution from the account each year starting at age 70 and a half. If you don't, the IRS will charge you 25% excise tax based on the amount they determine your minimum distribution to be. There are no RMD requirements on TFCGW accounts. That means you own a TFCGW account, you control it. You get all the benefits. So let's recap. 5 reasons a TFCGW account is better than any other savings account. 1, guaranteed, safe, tax-free growth. 2, high compounding interest plus dividends. 3, liquid, no penalty access. 4, uninterrupted growth even when using your savings. 5, no RMDs. Oh, and these savings accounts come with whole life insurance because the TFCGW accounts are cash value savings accounts that are an inherent part of whole life insurance. But to get a true TFCGW account, the policy must be a participating whole life that is constructed using special cash-rich riders that increase the value of the insurance and speed up the cash value growth. Now, if you found this to be helpful, please like this video, subscribe to this channel, and share it with your family and friends. Also, please post your questions and comments here. You have questions, we have answers. For a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is on the description box below. The link to buy my books on Amazon.com is also below. And if you'd like to book a free phone consultation with me, the link to my Calendly page is also below. If you'd like to apply to become a client of ours, the link to the application is below. We're here to help, and we look forward to helping you. Aloha and mahalo for watching.